Hi, I'm Sara Wojda, Diagnostics and Life Sciences Analyst for Gabelli Funds. Last week, JP Morgan hosted the world's largest healthcare conference in San Francisco. Over 9,000 people attended and 450 public and private companies presented. Companies range from emerging small-cap startups to big names with market caps over $300 billion in the subsectors of devices, pharma, biotech, life sciences, retailers, and insurers. Over the course of the week, I was able to identify several themes throughout 2019, as well as trends expected in the new year. With the preventative screening, newly launched drugs, and overall better awareness, cancer rates are down 2%. Money is flowing into healthcare with new treatments available. Even though Americans are smoking less, they are getting sicker. There is too much obesity, depression, drugs, and Alzheimer's. But the good news is that the consumer is doing just fine, as wages are up, people have re-entered the workforce, and they are saving money. China has fueled emerging market growth for all of the bigger life sciences companies, but a couple of turns were taken this year. First, the Chinese government decided to allocate its food investing to private company responsibility, negatively impacting volume. Secondly, China instated the 4+7 initiative last year, aimed to lower generic drug pricing, which created caution around instrument purchasing. However, since then, demand has increased from the local generic companies. The overall view is that China will stabilize and return to growth. After all, a huge part of the 5-year plan was investment in healthcare and the environment. Thirdly, partnerships have been common and beneficial. LabCorp has signed a collaboration with Walgreens in which it will open 600 testing centers in Walgreens by 2024. Customers can complete their testing and shopping in one setting. LabCorp should benefit from more patient visits, while Walgreens will benefit more customers buying more products in stores. Illumina and QIAGEN entered a 15-year diagnostics partnership in October, in which QIAGEN will develop kits for Illumina's NextSeq system instead of QIAGEN developing its own systems. Fourthly, companies are internally investing to gain share in high-growth markets. For example, Invitae has raised money twice to fuel its research and grow its sales team. It has grown volumes from 4,000 tests to 482,000 tests in just 5 years. Thermo Fisher spends around $1 billion per year on R&D, focusing on breakthrough innovations that will keep it at the top of its class. Fifthly, the larger reference labs of Quest and LabCorp are strategically picking up smaller hospital labs as the industry consolidates. Reimbursement cuts over 3 years are pushing smaller, higher-cost labs to either consolidate or shut down. LabCorp and Quest can apply their low fixed cost and highly skilled structures to these labs to make them profitable and operational. And finally, physicians in the office oftentimes tell us they are overloaded with information, especially when it comes to ordering tests and reading results. Exact Sciences is in the process of streamlining its ordering system for Cologuard. Approximately 70% of Cologuard orders today are sent via fax, which means that doctors need to write out the order. Exact Sciences needs to read the handwritten order, which is oftentimes illegible, then go back to the doctors to clarify, all of which are adding time and cost. However, with orders now available to be ordered electronically on the Epic platform, physicians are 65% more likely to order the tests, and Exact Sciences will not need to waste time or money to decipher the order. Earnings season will kick off at the end of the month, with Hologic and Illumina leading the way. Stay tuned, and thank you for your time.